Welcome back. Listen, if you're a focused practitioner navigating the complex and, yeah, let's be honest, sometimes really painful nuances of UAE corporate tax, you are absolutely in the right place. In today's explainer, we're going to equip you with the exact knowledge you need to master some of the tax code's most powerful provisions. We're decoding small business relief along with a few other essential tools that can just drastically change a business's financial trajectory when you apply them correctly. So, let's get right to it. Okay. Let's dive into this roadmap so you know exactly how we're going to systematically conquer this dense topic. First up, the big draw, 0% tax. Then, navigating the hidden traps. Third is the strategic judgment call. And finally, beyond small business relief.
Section 1. The big draw, 0% tax. And a massive share of SME accounting practice right now revolves entirely around unlocking this specific provision.
Zero. If you're managing SME finances, this right here is the ultimate prize. Under the right circumstances, eligible resident taxable persons can effectively achieve a 0% tax outcome. The tax charge is just entirely eliminated. But, as you probably guessed, getting to this magical zero requires jumping through some very specific legislative hoops.
And here's the magic number that actually makes that zero possible. 3 million UAE dirhams in revenue. That's your threshold to qualify. But let me plant a seed in your mind right now. Staying under this 3 million dirham mark, it is absolutely not as simple as just checking your current year's P&L. There's a very rigid way this revenue is calculated over time.
By definition, small business relief allows an eligible resident taxable person to be treated as having no taxable income for a tax period. Notice the phrasing there, treated as having no taxable income. It doesn't mean the business didn't make any money. It simply means that for the purposes of calculating corporate tax for that specific period, the authority essentially zeroes out the taxable income, as long as you strictly respect that 3 million dirham revenue threshold.
And this brilliantly illustrates one of the most critical mechanics here. This relief is absolutely not automatic. You don't just magically get a pass because your revenue happens to be low. The taxpayer must actively elect this relief on their corporate tax return. And here's the kicker. Once you make that election for a specific tax period, it cannot be reversed. You are locked in.
Which brings us to Section 2, navigating the hidden traps. Because while the initial expectation is that this relief is just an easy pass, the reality is full of hidden, really rigid compliance traps.
Let's walk through these strict conditions. First off, that 3 million revenue threshold, it's assessed cumulatively. We'll get into exactly what that means in a second. Next, take a look at the timeline. Based on the ministerial decision, this relief sunsets on the 31st of December 2026. Now, definitely always check the latest FTA guidance for any extensions on that sunset date, but as of right now, there is a strict expiration. And finally, and this is a big one, registration and return filing are still mandatory. So, the crucial point is this rule regarding cumulative revenue. If the business exceeded 3 million dirhams in any previous tax period since the relief was introduced, they become permanently ineligible. Let that sink in. Even if your revenue drops way back down later, it doesn't matter. If you cross that line even once, you lose it forever.
I really want to speak directly to the working accountants and SME owners out there. Electing small business relief eliminates the tax charge, yes, but it absolutely does not eliminate your registration or filing obligations. You still have to register for corporate tax, you still have to track your cumulative revenue flawlessly, and you still have to formally file the return to actually claim the relief. The tax authority never truly lets you off the hook.
Moving on to Section 3, the strategic judgment call. This is where we hit the core dilemma of this explainer, because these specific rules elevate the accountant's job from simple compliance to complex strategic advisory. Now, what's really interesting about this comparison is how it visualizes the massive trade-off you face, because electing the relief for a 0% tax outcome today means you permanently forfeit the ability to carry forward any tax losses from that period. Alternatively, you don't elect it. You record your standard tax position today, which might be a huge loss, but by doing so, you preserve those losses to offset against future profits tomorrow. To quote the source material directly here, this is genuinely a judgment call that needs modeling. Not just a box you tick because revenue happens to be under AED 3 million. Think about it. If a client is sitting on heavy losses, they might actually be vastly better off not electing the relief. You've got to run the numbers. Financial modeling is an absolute necessity to figure out what benefits the business more in the long run.
Section 4. Beyond small business relief. Let's broaden the landscape a bit to show the full arsenal of other reliefs available to practitioners.
Let's move to and see how this builds out your strategic toolkit. First, you have qualifying group relief for entities with at least 75% common ownership, which allows for tax-neutral transfers. Then there's business restructuring relief, providing tax-neutral treatment for mergers and spin-offs, but definitely watch out for the 2-year clawback on those. And finally, foreign tax credits, which prevent double taxation when foreign tax has been paid, though it is strictly capped at the UAE tax payable.
We've covered a lot of ground today, from the rigid traps of small business relief to the complex clawbacks of restructurings. But mastering these is just one pillar. It leads us directly into another, highly feared but absolutely essential topic that you must master. So I'll leave you with a final, provocative question. Are you ready to tackle transfer pricing and related party transactions? Because that is the next great frontier. Thanks for joining me for this explainer. Keep at it, and I'll catch you next time.